All right, you're welcome back. This is still starting your investment journey audio series, and we have come a long way. If you spent any time online over the past decades, you have probably heard stories about cryptocurrency. It's not something that is new. You have heard about it. Whether you know about it or you don't know about it, you have heard about it. You probably heard about someone that bought Bitcoin early and they have become wealthy. Or maybe someone says that crypto is the future, right? Or someone else says that it has no value. You've also seen people that have lost their life savings because they invested into a meme coin, right? So you've seen a lot of stories online, some good stories, some bad stories. So the question is, who is right? The answer, as it's often the case in investing, is not just straightforward. It is usually more complicated than who is right. So, and we're going to explain some of those things in this episode. So, what is a cryptocurrency? A cryptocurrency is a digital asset that uses cryptography and blockchain technology to record and verify transaction. That is what a cryptocurrency is. Of course, don't worry if that sounds technical. Let's find a way to simplify it. So think of cryptocurrency as a digital asset that exists electronically and can be transferred between people without relying entirely on traditional banking infrastructure. That is the basic idea behind cryptocurrency. So to understand cryptocurrency, we need to understand the origin and the problem that it was trying to solve. Traditionally, if you send money to someone, a trusted intermediary sits in the middle, usually a bank or a payment company or a financial institution. And what they do is to verify the transactions and keep records. So cryptocurrency introduced a different idea. And the idea is that what if a distributed network could maintain those records instead of having it in a bank or if a financial institution or a payment company? What if we can have a distributed network that could maintain those records? And that was the beginning of the first cryptocurrency, which is Bitcoin. Bitcoin was launched around 2009 thereabout, and it has become the most widely adopted cryptocurrency over time. So what about blockchain? What is blockchain? So blockchain is the technology behind cryptocurrency. So think of it as a shared digital record book where all of those transactions are recorded. So instead of one organization controlling the records, many participants maintain copies of the record. So that is the way it is. So when transactions occur, the network updates the record automatically, and that is how it is. So whether blockchain succeeds or fails in every application is a separate debate that we're not going to in this conversation. But the most important thing for investor is that you should understand that cryptocurrency are built on that technology that is called blockchain. So why do people invest in cryptocurrency? So different investors are attracted to cryptocurrency for different reasons. Of course, the strongest reason is potential growth. Some cryptocurrencies have experienced extraordinary price increases over certain periods, and these attract investors that are seeking growth. Remember the part of our portfolio that is growth. So some people that they want that massive and aggressive growth, they want to consider cryptocurrency. So the second reason why people invest in cryptocurrency is because they believe in technology. So some people believe that blockchain technology plays a significant role in the future economy. So they want to be a part of it. So they believe that this technology is the future. So they want to be a part of it. Number 3 is portfolio diversification. There are investors that also allocate a small portion of their portfolio to cryptocurrencies because they behave differently from other traditional assets. And they feel like there's no harm in diversifying into this asset class also. Let me just diversify some portion of my portfolio into cryptocurrency also. And number 4 reason why people also consider it is global accessibility. Cryptocurrencies can often be accessed by people who may not have access to certain traditional financial services. So everybody has access to it, and you can easily send money to anybody in the world and they understand it. So instead of, if I'm using Naira, for example, I want to send money to someone maybe in Australia, I have to convert it to Australian dollars for the person to receive it. But with crypto, both of us can understand it. So it's like a global language that everybody understands. So now let's discuss what many promoters leave out when they are promoting cryptocurrency and the hype and the trend online that crypto is the future. Come and put your money. Remember, we talked about FOMO, fear of missing out. We talked about herd mentality. We talked about panic behavior. So there's something that you may not hear in most of those conversations, is that cryptocurrency can be extremely volatile. We talked about volatility earlier. They can be very extremely volatile. So it is not unusual to see major cryptocurrencies experience significant price swings over relatively short periods. So in 5 minutes, a cryptocurrency can go up significantly and can also come down significantly. So imagine that you make a wrong move. It means that you can either win big or lose big. So you have to be emotionally and financially prepared for that reality. Now, let's understand the difference between speculation and investing, especially when it comes to cryptocurrency. Many people are not investing in crypto, actually. They are speculating. So investing generally involves understanding the assets, understanding the risks, and making informed decision. On the other hand, what speculation looks like is that someone online said that this thing will go up, so let me quickly buy it so that I can also benefit when it goes up. Those ones are speculating. But the people that understand what they are putting their money into, they understand the assets, they understand the risk, and they are making informed decision, they are investing. Of course, it doesn't still mean that because you're investing, you're automatically going to always make money. You can still lose your money, but at least you are better prepared than the person that is speculating. So now let's examine some major risks when it comes to cryptocurrency. The first one is market risk. Just like I've said, it can go up dramatically and prices can also fall dramatically. So that is a major risk. Number two is regulatory risks. So talking about market risk again, people have made money significantly from cryptocurrency because they bought a coin and the coin goes up dramatically. Sometimes maybe times 100, times 1,000, and they sell it and they make money. On the other hand, people have also lost money significantly because the cryptocurrency, the coin that they bought, loses value significantly, and then they lose all their money. So imagine buying something when it was 2 million naira, and then the value reduces to 200,000 naira, and you bought maybe 20 of them. You know that is a major problem. So the price can go up dramatically, and the price can also go down dramatically. Number two risk is the regulatory risk. So governments around the world continue to develop policies and regulations relating to cryptocurrency. So regulations can influence adoptions, access, or market behavior. Sometimes a major news can make it to lose value or gain value. Number three is security risks. Unlike a traditional bank account where you can easily have access to bank and the risk is significantly lower. So for cryptocurrency, users often bear significant responsibility for protecting their assets. You can't go and meet anybody and say, they have stolen my money. There's nobody to go and meet. So lost credentials can sometimes mean lost access, no matter how much you have there. If you lose your login details or you forget sometimes your secret passphrase, that may be the end of your entire account, no matter how much you have in it. So the security risk is very high. If someone forgets their details or they make any mistake, that's all. Number four is fraud risk. The crypto space, I've seen a lot of scams, a lot of fake projects, a lot of fraudulent schemes, and a lot of unrealistic promises. So this makes due diligence extremely important. So now let's talk about the get-rich-quick trap. The biggest danger is perhaps the psychological risk. So many people enter into cryptocurrency hoping for overnight wealth. Of course, you can't blame them. They have seen a lot of success stories online. They've heard of people that maybe put a small money and then a few months later, they became millionaires. And of course, usually they will flaunt their wealth to attract more people to come into the system. So crypto guys can be very loud sometimes. So they see a lot of success stories online. So what they often don't see are the losses. People don't post losses. You don't see failed projects. You don't see the poor decisions. You don't see the survivorship bias. So all of those things are not often loud. So for every dramatic success story, there are often many untold stories of losses. In other words, for every one person that you see a success story, there's probably like 1,000 people that have lost their money. So that is very important. So let's connect this to everything we've learned before in this series. A portfolio should be built around objective. What is this goal supposed to serve? Usually cryptocurrency will serve the growth objective, diversification, and the risk management. You also have to pay attention to your risk management. So cryptocurrency should not magically replace those principles. So the same question still applies. What roles does this asset play in my portfolio? What risk am I accepting, and how does it fit into my overall plan? The rules of investing do not disappear simply because the asset is digital. So whether cryptocurrency ultimately becomes a dominant part of the global financial markets or not remains a niche asset class, right? So whether it eventually becomes a major part of the financial assets, one thing is certain: investing is a strategic game. So understanding cryptocurrency is better than ignoring it. So investors do not need to own every asset, but they need to understand the major assets that are shaping the modern economy. And cryptocurrency is one of the major assets that are shaping the modern economy. So it is neither magical or meaningless. It is simply another asset class that comes with opportunities, risks, uncertainty, and potential rewards. So approach it with curiosity, try to learn more about it. For people that are really risk averse, they want to stay away from cryptocurrency. But I want to advise you to read about it. But approach it with curiosity, approach it with caution, approach it with education, and most importantly, never invest into something because everyone is talking about it, right? And this is also true concerning forex trading. So people go into forex without fully understanding the risk involved, and they often lose their money. I've heard cases of people that put their school fees, their house rent, their life savings, their business capital, or their children's school fees into forex trading or into crypto trading before they understand what it is, and then they lose their money. So they didn't lose their money because the system itself is bad. Like we said, people are making money from it. They lost their money because they reacted to hype, to trend, rather than taking informed decision. So with what we've learned so far, I believe that you should do better. So, all right, we've talked about traditional investment, we've talked about digital investment, we've talked about cryptocurrency. There is one final category of investment that many people overlook completely. Ironically, it may deliver some of the highest returns available. So, investment that improves your ability to earn, your ability to produce, your ability to connect, create, and access opportunities. Those are the things we're going to be talking about. So investment in tools, investment in systems, in networks, in leverage. That's what we're going to be talking about in the next episode. Thank you very much, and see you in the next episode.